I know I'm leaving out some details, but most know how this works. So this part is a quick recap of what you learned in school. In school, everyone was told that when you increase supply, then prices should drop or decrease. When you decrease supply, then prices should increase. Or if you lower prices, then demand will increase. Or if you increase the price, then demand will drop. This is the way it once was, but companies today are a lot more sophisticated and have many more tools that they can use to make this irrelevant. Because of this, there are a lot of things we were told in school that do not always work in the real world. And if you tried them, then you could bankrupt your business. For example, in the late 1980s, the United States airline industry got into a price war. The result was that many of the smaller national airlines went bankrupt, such as Braniff International and Big Sky Airlines. And the big or major airlines took years to recover, such as Delta Airline. When you operate a business, you know what it costs to make your product, or supply the service. Your costs are similar to your competition's costs. Therefore, each company knows how much they can lower their prices, and still make a profit or break even. And competing on prices can lead to or create a price war. A price war can result in most companies lowering their prices below what it costs to make the product or operate the business. And winning a price war will be contingent on how much cash the company can get. This can be in savings or in loans. When the other company is out of cash, is when you win the price war. However, the company that wins might now have a lot of debt, or their savings might be depleted. And not being able to get extra cash in the future when needed, can hurt a company's growth. Or a company might need new machines, parts, or equipment in the future. And will not be able to get it because they cannot get the cash to purchase these things. So now companies no longer compete on price. Instead, they offer something of little cost, but make the consumer believe that it is a good deal. For example, when the advertisement says to buy a second one and only pay shipping and handling. When a company ships thousands of items each month with a delivery company, the price they pay is about 10% of what the average person pays. Because it is a fabricated cost, handling is all profit. Therefore, when they say only pay shipping and handling for the second product, it is probably costing the company nothing. And thus, it is mostly or all profit. Another example is when you go to the store, and the packaging is still the same size, but the amount in the box is less than it was before. In the past, you would buy 1 gallon of ice cream. But now when you look at the packaging, it says 0.78 gallons, but the packaging is still the same size. Thus, no one competes on price. In 2022 and 2023, OPEC said that it will reduce oil production in an attempt to keep oil prices high. Therefore, reducing supply should increase the price. However, when you look at this chart, the opposite happened. OPEC reduced oil production in October 2022, and prices increased for 3 days. But then oil prices kept falling for the next 6 months. Then OPEC tried the same thing in March 2023, and like before, the price of oil increased for 3 days, and then kept dropping. Now some will say that this is because the world's economy is slowing down, and therefore, demand has dropped. The world's economy cannot slow down in 3 days to where the price of oil is less than what it was before OPEC cut production. The world's economy does not change that much in 3 days. The world's economy does have a big impact on the price of oil. But it does not happen in 3 days. Both charts do show a downward trend over time. But when OPEC cut production, the price of oil should have remained high. Yet, after 3 days, the downward trend resumed as if OPEC cutting production had no effect. The only thing that can make this happen in 3 days is options trading. All the options traders saw that OPEC was cutting production and attempted to get rich from it. Now you know that what they told you in school about supply and demand does not work anymore. Companies today are a lot more sophisticated and have many more tools that they can use to manipulate a market.